Whether you receive the CERB or business grants or some other variation of pandemic relief, as the May 2nd deadline to file your taxes approaches, you may be wondering what pitfalls could await you. Jackie Porter is a certified financial planner at Carte Wealth Management, and she joins us now from the provincial capital to help pave the way. Jackie, it's good to see you again. How are you doing?
I am great. Thanks, Steve. It's great to be here.
Great to have you back. Now, during the first couple of years of the pandemic, there were various deductions that people could take advantage of to lower their tax burden. Anything new this year we ought to know about?
I think probably the big one is that for parents who have had a lot of childcare disruptions, they are actually going to get an extra 20% on top of what they would normally claim for childcare expenses. Of course, this is all dependent on your income, but you do get that extra 20%, and I think that's a step in the right direction for Canadians.
Now, I bet a lot of people didn't know about this, and I bet there are other deductions that people are eligible for that they also don't know about, such as maybe.
Yeah, I think another two that I'm going to mention, because again, they're kind of pandemic related. Obviously people are spending much more time in their homes, and that includes seniors. And I think for a lot of seniors who might have spent less time at home before, they might have found out their home could use some extra help being safer for them. So the government introduced something called the Seniors Home Safety Tax Credit, which will give seniors up to 25% of a tax credit to a maximum of $10,000 to make their home safer, get rid of some of those maybe scatter rugs, things that they could really hurt themselves on. And that would also apply to a caregiver as well. The other one that I think would be great to mention here is the jobs training credit for people who've been disrupted with job loss during the pandemic. They'll get actually up to $2,000. They get a credit for 50% up to a maximum of $2,000 to get new training, to get work in a new field, or just really to improve their skills as they go job hunting.
Okay.
As we go through the recovery.
How about if you are accustomed to working in an office, but then you've discovered over the past couple of years that you've been spending a lot of time working out of your home? Any deductions available there?
Yes, and yours truly is in that situation as well, Steve, so I get that. So if you're an employee, the good news is this year you're going to actually get an extra $100. So the credit went from $400 to $500 for any office-related expenses that you might have. So that's good news as well.
And anybody eligible for that?
Yeah, any employee who's been working from home throughout the pandemic is eligible for this up to $500 tax credit.
Gotcha. Okay, we know the pandemic has led to many women leaving the workforce. Households that used to have two incomes, many of them are now down to one income. Is there a way for couples who are in that situation to reduce their tax burden?
Yeah, and I think this is a really important issue to highlight, Steve, because I think often people are making tax decisions or planning to file their taxes without talking as a family, working together as a family, and tax planning as a family. So if you were somebody who was the lower income spouse that might have been making the RSP contribution, and you might be losing out money for that family. So consider talking to your partner, who's the person who's now the breadwinner working from home, if you're planning on doing things like making an RSP contribution, then it may still be worthwhile for you to give that money that you would have normally made the contribution with to your higher income earning spouse, so that you can get back more tax refund as a family, not just as an individual. So I think talking as a couple, seeing who should be making that childcare expense, who should be making the RSP contribution, and really doing more family versus doing tax planning as an individual is going to be the biggest takeaway, I think, for families coming, as we recover again from the pandemic, and we're looking to keep more money in our pocket as Canadians.
Well, since you raised the issue of RSPs, there are a number of different vehicles, I guess, that people who are lucky enough to have some disposable income ought to be considering right now. The retirement savings plan is one. I guess the tax-free savings account is another. In the last federal budget, they've come out, the feds did, with some kind of home ownership for first-time home buyers, a savings plan for them. What's your advice on where people ought to put that money?
It goes back to what we were talking about before. It all depends on income. And that's why it's so important to say who's earning what and who would benefit, how would we benefit most as a family from, these tax strategies. So it's the same when we're talking about these different tax vehicles. What type of income do you earn? If you're a higher income earner, earning over, say, $65,000, RSPs might make more sense for you. If you're a lower income individual, then you may not get very much benefit out of the RSP contribution. So a tax-free savings account is really where you want to be, because then you grow money tax-free and you also can withdraw it tax-free. Sometimes when people aren't aware of that, they make an RSP contribution, and then when they take it out, they didn't realize they were going to have to pay a tax penalty when they withdraw it. So consider your tax bracket when making contributions to some of these tax products.
And I guess I shouldn't forget, there's not just the new for first-time home buyers tax vehicle as well, tax avoidance vehicle, but they've got registered educational savings plans out there as well. If you want to start saving for post-secondary education from the time a child is very young, what's your recommendation on that kind of vehicle?
Yeah, that's a great one, because nothing I love more as a financial planner than telling people about free money they can get back from the government. The government will give you up to 20%, up to $2,500 contribution on that RESP, that education plan contribution. So you're literally getting an extra $500 just for making the maximum contribution. And that's going to help, because what we do know is it's getting more and more expensive to fund your child's education. So any help you can get from the government, it's going to take you a little bit further ahead.
Now, Jackie, I'm going to say something shocking here, and that is, I know you love numbers, and I know you love taxes, and I know you love, okay, we get that you're into that space, but a lot of people find the whole process of filing their taxes very distressing, sometimes very overwhelming. I wonder if you have any advice for them.
Oh, my biggest incentive there is the penalty. The penalty is real. It's so real. It's 5% if you don't file your taxes on time, and 1% for each month. So 1% additional for each month that you wait to file. So that's money that you could be using for all of these plans that you have, all the things you want to do for your future. Why give that away to the government? The other thing is, I find it stressful when you wait till the last minute to start dealing with your income taxes. Better to get an accountant, somebody who is a tax advisor versus a tax filer, who can help you make decisions around how you should be dealing with your taxes throughout the year. The worst time in the world to get in contact with a tax advisor is at tax time. So try to avoid that and have these conversations throughout the year so it doesn't end up being this last minute, very stressful thing that you have to deal with. You'll know what you have to pay, and you'll have a plan for how you're going to deal with it. And
just to confirm here, I know there are penalties in place this year, and you just pointed them out, 5% and then the 1% per month. So that's right. Good incentive for us all to get this done on time. But the government did give us a holiday on penalization over the past couple of years, did they not? Or maybe you could help fill in the blanks on that. Oh, yeah, that was only for the first year, and they gave you until September. I think it was September 15th, if I recall correctly. But after that, the government's like, file your taxes. We want our money. So there's unfortunately no holiday this year, folks. You want to get this done on time, and if you need help, reach out to a tax advisor. As I said, sooner rather than later. It's a little bit hectic this time of the year, so it's always better to just have a plan for how you're going to manage it. The excuse of the pandemic can only take us so far, eh? Yeah, the government wants their money now. They do. Yes, indeed. I get it. Jackie, it's always good of you to spend time with us here on TVO. Thanks for your time and all the best.
The Agenda with Steve Paikin is made possible through generous philanthropic contributions from viewers like you. Thank you for supporting TVO's journalism.